go on and on with all the headlines that are hitting the tape right now, but let's bring in the floor show. Joining me now live from the CBOE is Bullseye Option Chief Market Strategist Alan Nuckman and 213 Strategic Partners founder and CEO Gregory Sarian. Alan, what is the volatility index telling you about how jittery investors are right now?
Well, that news was not inspiring, I must say, but the price actually isn't as bad as the headlines seem. If we look at the VIX is trading around 33 right now, almost 34. But as of yesterday, it was 50% lower than it was at its peak just, a few sessions ago. Also, we had a key reversal last week in the VIX, meaning it made new highs on the year and had a lower weekly close. So a weekly key reversal, which is very significant. So now we have to see how the markets digest all this. But it looks like some profit taking after that big boom that we saw where the markets almost recovered half of their losses.
Yeah, but it's now back up about 12% over the past 48 hours. Gregory, give me a sense of where you look in a time like this for your clients, because this is very specific. These headlines, it's, well, there are going to be tariffs on certain areas, and then things tend to change within a blink of an eye, actually.
Absolutely, Liz. And listen, this volatility is going to be with us for some time. I think over the next 90 days, as we get fits and starts with different agreements with different countries, even when we get these things ironed out, then we have other issues the market's going to have to address. The X date is going to happen later on this summer. The debt ceiling is going to cause volatility. And right now, CEOs are sitting on their hands. They're not hiring. They're not spending money. So that, too, is causing uncertainty in markets. This is going to be with us for some time.
Yeah, that's exactly what Jay Powell said, did he not? So, Alan, when you are looking at what to buy, are you looking at, well, I don't want to buy this company because it has too much exposure to China, because you actually were playing the options market in Walmart. They have tens of thousands of products that are imported from China.
Yep. Yeah, Walmart, we talked last week, was a great play as far as following the money flow, and there was accumulation by smart money on the long side, building positions. So I followed that. We saw a big bounce. I trade limited risk options. We saw a big bounce in Walmart, and we exited those positions yesterday. So a small move, or actually a pretty healthy move of whatever, 7 or 8%, produces a 75% gain in the deep in the money options. But what I'm looking at right now, there are a couple of stocks that have good risk reward and also have this money flow in them. The only thing that we're certain of right now is this uncertainty. So I can't try and figure this out. I have to trade what I see, and I see money flow into Freeport-McMoRan that's been beaten down, but you're seeing some money in that. You're seeing silver also. SLV is the ETF that tracks silver. That's still significantly off its highs of the year, really off its all-time highs of $50. We're trading at half of that if you adjust it for inflation. So FCX, which is used to be Freeport-McMoRan, and gold continues to lead the way.
Oh my gosh.
And SLV right now is where you see money.
I am really glad you just brought up gold. Gold, you guys, Peter Schiff was here yesterday. He said, even at record highs, it will go higher. Sure enough, it is up $117 right now to $3,357. And he had yesterday, Alan, specifically recommended IAG. And right now, that one is going pretty parabolic. It's hitting a brand new high. It's up about 8.8%. Gregory, is there a safe haven that you are specifically guiding investors toward right now?
So a couple things on that, Liz. Yes. So we saw last week the rout in the bond market, and yields moved up. Right now, intermediate term, high quality municipal bonds are paying in the area 3.5% federally tax free. I think that is absolutely a safe haven. But let's keep in mind too, Alan mentioned the VIX. Historically, you can go back to market pullbacks like this over the last 50 years. When the VIX spikes past 45, the next 3 to 5 years are generally pretty good. So right now, we're encouraging clients to do some tax loss harvesting, to make some intelligent swaps, to do IRA to Roth conversions, and take advantage of what should be a much better environment over the next 6 to 9 months.
Well, you also talk about high dividend ETFs, right? Eventide ELCV, but I'm not loving the performance right now. But what is the advantage of going in there at the moment?
Right. I believe these cash-rich, dividend-paying, dividend-growing companies make a lot of sense right now, Liz, because while you've got this uncertainty in terms of appreciation, interest rates are low, money market funds. You're going to see money pour back into these high quality companies. And they've been out of favor. When you think about what they've done relative to growth names over the last decade, the valuations are much more attractive and you're getting paid to wait. ELCV is 41 high quality companies, utilities, energies, financials. It pays a dividend yield of 3%.
Alan, I'm hearing a lot of screaming in the background. Which pit is that in? Because the S&P is now at session lows. Same with the NASDAQ, which is down 736 points. The Dow is now getting clocked here, down 898 points.
Yeah, I think it's both the S&P and the VIX. You know, they're gonna move hand in hand. When we make new highs in the VIX or new lows in the S&P, you see some action. But I want to, get everybody to be clear about sticking to your trading plan. These markets have traded very efficiently over the last month. Yes, we've seen some movements, but that's all opportunity. Last week we talked about NEM, which was a gold mining stock that had really not participated in the gold rally. It still has a lot more upside, even though it's had a significant move. So there's always going to be opportunities, but you've got to be patient and maybe trade a smaller position than you used to if you're actually trading or investing now, because this is not over, but we do have a bottom base in place. And I look at key levels. That key level up above was at 5,500. We came right close to it, which was that support level before the Liberation Day. Right. And then now below us is the halfway move of this rally from the bottom is about 5150. So we want to see how those numbers, how the markets react around those numbers, and trade what you see.
We're at 52.31 right now for the S&P. I do just want to let our viewers know as we continue to watch this, gold is now up $115 and the VIX is climbing 13.7%. Thank you, Alan. Thank you, Greg. One company, though, bucking the trend. It's forging a